radio for a really great future. We're talking real money.
Wait a second. This is a money talk show. Why are we talking about thermodynamics today? The second law of thermodynamics says something about entropy and stuff. You know, I didn't learn any of this stuff. I was a deadbeat in high school.
Well, that implies you didn't pay your bills.
That means I didn't go to school.
Oh, okay.
Which makes you a deadbeat. If you don't show up, it's like deadbeat dad. That's the dad who didn't show up and paid the bills.
Okay.
I neither paid the bills nor I was a bad kid.
So you weren't there.
I was a bad kid. I didn't learn the second law of thermodynamics back then, but I kind of get it now. It basically means that if left to its own devices, the universe would devolve into utter chaos, kind of like my life.
Your life is fairly ordered, but okay.
No, it's not. Your life.
Yes, my life
is fairly ordered.
I think somebody once said Tom is in a rut inside of a rut or something. I'm just like
with a rudder, but not a rudderless rut.
Not a motor, but a rudder.
Right. By the way, his boat motor is dead.
It's stuck.
It's not a gas one, though, because he lives on one of these little teeny tiny lakes where they're not allowed to. Well, because if you had a gas motor, you'd go from one side of the lake to the other in about 12 seconds.
That's about right. That's about right. So, but it's not.
Anyway, what are we talking about? We're talking about an article in Kiplinger or Kiplinger.
I love it.
That is entitled "The Second Law of Retirement Rules."
Yeah, and it's a fascinating thing that a study that came out recently found that this is a sad number of 4%.
There's a number that's actually sad.
This is sad. Oh. When I saw 4, I thought 4% withdrawal rate, right? Because we're talking about money and retirement. No, 4% of retirees said they were living the dream. 4%. 15% said they were struggling. 63% said they wished they'd done more planning.
4%.
4%.
Really? And our pitch all along for this show has been live the retirement of your dreams.
Yeah,
live
you were the one who came up with that. Yeah.
Yeah, and apparently we're failing miserably.
Yeah, and it's not just the money, although the money is certainly part of it. We'll get into that in a minute. But it's also the second law of retirement. That left unmanaged, your time, your money, your energy will drift towards disorder. Which and they get into the specifics, right? They're kind of getting up every day is a Saturday, right? You get up, you watching TV, kind of hanging around. You don't really got a routine, and people. I love this one quote: "If you don't drive the agenda, time, money, and energy will slip away on someone else's terms."
Well, I got to tell you, this is one of the reasons why I'm so afraid of the thought.
I know, I do not favor it.
Just the idea of it scares the living daylights out of me.
I totally concur. So, okay. So they get into talking about how routine improves mood and reduces stress and all the measurable benefits. But how do you do that? Right.
Right. How do you want, I mean, it's got to be money too. We got to get into that, but you're talking about just the easing yourself into retirement part. Yeah. How do you make that happen? How do you plan for that?
Dan, you tease me a lot about my vacations, which I think I probably have it coming, right? I mean, I think I did go to Arizona.
You do take a lot.
And then I'm going to Europe for a little bit, and then I'm going to go to Chelan for a little. I mean, so yeah,
you've got Arizona.
Yeah.
You got Chelan.
Yep.
Which you do every year. Yep. You've got Europe. You got Africa. You've got where?
That was last year.
Just a year ago. Was that just a year ago?
Yeah, okay. But the thing about those is...
Don't you have a job?
I wouldn't say I disconnect entirely. And now I don't do the podcast and the show while I'm there. I guess I could.
No, you make me do them. But now I made you get a new mic. So
I could probably fit it in there and do one live from the Eiffel Tower. But so, yeah, you and I, we're failing at this. I think we have to be honest with ourselves.
I am, but I got to tell you, Tom, I am happily failing at this because I cannot even imagine, honestly, for me, and I'm talking totally personally, I cannot imagine a scenario in which I would be happy without work. Can't imagine it.
But what about work that doesn't have a paycheck attached to it? Like
no.
Because you're a volunteer. You volunteer in your community.
Yeah, but I hate it.
But you do it.
I do it because
I don't know if you really hate it because you've signed up to do this several times now.
Well,
So you
because
gotta
people
question
ask
that.
me to, and
Yeah,
I
you
feel
need to go see your therapist,
I
analyst,
feel
and ask him why.
obligated to do it, but I do not like it. I do not like it. I'm the president of my HOA again,
Yeah.
and
But
I
if
hate
you really hated it, why would you be president again?
because
What
somebody
are you, like George Washington? If they got to do it, because you don't want John Adams in here running things, do you?
Well, because if there is somebody who's competent, they need to step up sometimes. And hello,
Wait,
America.
So
Hello?
you're suggesting that everyone else in
Sorry, I
the
was
greater
calling America for a minute.
celebration area is not okay.
Well, the proof has been in the previous puddings.
No, all right, okay, but we'll talk about both of these things. About the
I don't want to volunteer in retirement. No, if I'm going to do something, why shouldn't I get money for it?
I guess that's a legit. But what if you wanted? You're a history guy. What if you went and worked at a museum and helped people understand history?
Boring. I'd rather do a history podcast and get money for it.
Okay. Fair enough.
To me, that's just boring.
Do you think so? Yes. But you could talk to people. I did a little bit of it when I was, and I shouldn't have, but there was a certain plane that I know very well when I was back in the Washington, D.C. area. I saw when I was standing there looking at the plane, and some kid came up and said, what about that plane?
Would it be a B-17 or a B-24?
Nope.
Oh, you have so many planes you love.
P-61. It was the one that my dad was trained to fly.
I never guessed a P-61.
It's the only one I've ever seen in person. So I was spending quite a bit of time there. And some kid came up and asked me about it. And I said, well, just for the record, my dad flew in that plane, was trained to fly that plane. And the kid that sold him. I mean, I talked to him for about 10 minutes. I enjoyed it. Anyway, so we're veering. You're going to get paid. I may do something volunteer. We'll see. Well, I don't know how to go, but traps.
You're going to be at the museum, the aircraft museum over there.
Museum of Flight.
The modern military, military aircraft museum.
Yeah, no, maybe. But the traps to avoid. I mean, there's people that are way overspend at the beginning because you want to talk about the money. I've seen this where people leave their jobs and then all of a sudden they're spending way too much money on trips, remodeling. They got to have something there that involves them, and that's a problem.
So it becomes spending.
Yeah, or the people that you have to beg to spend anything. They're scared to death. I just talked to an 81-year-old woman who has several $1 million but will not spend it because she's scared she's going to run out of money. She lives on about $100,000 a year.
Yeah, but an 80 that generation is sort of slipping away. That was more the greatest generation because of a depression mindset.
Sure, absolutely.
With the boomers, we're not exactly tight-fisted.
Not in any way. The National Council on Aging found nearly half of adults, age 60 and older, have incomes below the elder index. So that suggests that they're going to have trouble well beyond trying to find purpose. And part of that problem, Don, is something we have talked about previously. And that is when you're retired or getting close to retirement, you need to look carefully at really whether or not you can support others. I've seen it in my family where people have said, that's okay, I'm going to take care of my daughter, blah, 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 when they didn't have enough money for themselves. That's a problem. And by the way, all you're doing then is kicking the problem down the road because eventually you will not be there and that child will have to take care of him or herself.
Yeah, I think there needs to be a cutoff on
there needs
care
to be,
of kids.
Well, no, I think like age, I think you have to say, look, here's my situation. I can't afford to take you on. Maybe it is an age, maybe it's an amount, but whatever it is, you're right. A guideline, a roadmap, something. You just can't, because what happens is, and I've seen it, person gets in trouble. Got to have 20 grand. What do you do? Tell them no?
Well, you're looking at, are you asking me?
I'm asking you.
Yeah, I'd say no.
I know you would.
Yeah, I would. I would say
but
no.
There's a lot of others that wouldn't. They would say, oh, that's my kid. That's my grandkid. I'll take care of him.
It's funny because I've had no said to me several times.
I've had no said to me.
And I managed. Yep. The funny thing is as insurmountable as the problem seemed to me at that age, I somehow managed to solve them.
Yeah. And that's a good example. Okay. So the money thing is part one. The entropy is part two. So how do you deal with it? I mean, the article quotes the film composer John Williams, who said at 90, he said he was retiring. And then 6 months later said, nah, retiring from music, you can't do that because music's like breathing. I just can't give it up. That's my sense about you. You'll be recording something until that last breath.
Yeah, probably.
Which I hope's not soon, by the way.
I haven't even shared with you my latest podcast idea.
No.
I'm not going to share it right now. I'm going to share it eventually.
Ooh, so a teaser. So
teaser.
People tune in later.
It's a totally new podcast, which means it's
It
personal.
does not surprise me. Don has a new idea for a podcast about as often as I change underwear, so it's not a problem.
I honestly, I still have 3 active podcasts. I have Talking Real Money, Lit Reading, and Rita Storis. I'm not actively contributing to those 2.
All joking aside, I cannot believe that this is not a visual medium. So how does lip reading even work in a podcast? I don't understand that.
You just don't pay any attention to what I say, do you?
I'm looking at your lips right now, and they're moving.
With a T. Lit reading. As in literature, another area where I didn't do well in high school.
Me either. Yeah. Well, that's not totally true. All right. So what do you do? About part 2, about the disorder.
You need a plan, right?
You need a plan. I mean, and
we say that a lot.
I know, but the thing is, I like the idea of a trial, right? That's kind of what I'm doing with the vacations too, by the way. Trying to do less while I'm on vacation. I'm still in contact. I'm still doing some stuff, but I'm not here with the grueling office staff every day, right? It's easier. So, but part 2. How do you deal with this? The people that know these things, that study them, and I think I'm one of them because I see so many of people are retired, that there are 3 things that do work, and they agree in the article. Social contact.
Okay, I fail on that one.
Yeah. A sense of purpose, which you have.
I have that.
And physical activity, which
I don't have that.
Well,
so
other than going up down the stairs
one
a
out
couple
of
of
3
times.
ain't bad.
No, I mean,
is it?
It's not the best. So I'll give you a couple other examples. By the way,
in baseball, that would be a pretty good average.
That's true. You'd be playing in the major leagues. I did just see our friend Paul Merriman recently, who will be 82, I believe, in October. And he kind of fits. So he told me he's still doing, and he even said, I have to use air quotes when I say my workout. He started to go into it. I said, that's okay. You're active. That's good. You're doing something, right? That's one. He does, and I think he fails on these as miserably as I do. He does still go on trips with his family. He had just gotten back from Europe. And I said, how was everything? Oh, it was okay. Mm-hmm. I had to answer this. I had to do this, that. And that brings me to the other one that I think provides the purpose for Paul, which I think it will for you too. I know it will for me. And that is helping others. There's an aspect of somebody else needs me in retirement. It's not just me in the television. Because I've seen that too, me and CNN, not me, but somebody in the family. You sit around, watch it every day. It was depressed. I'm like, yeah, that's depressing to watch that all day, every day. I would not like that. So
watching news all day, any kind of news.
I don't care who's doing it.
Drive me up the wall.
Me too. Be engaged, have hobbies, have a plan. But the plan part is the part that you said most people in this survey said they didn't spend enough time on. And that's something we do harp on, both the financial part and the what am I going to do part that many people ignore.
Yeah, and we don't spend much time because it's a money show talking about the what do you do part because that's our first goal is making sure you have the money to do the do's. If you don't do the do's, and then you're done.
You're going to pay your dues.
You're gonna pay your dues. You're gonna be in that 60 some odd % who wish they'd planned better.
Yeah,
because I think the biggest part of the plan still comes down to money.
It does.
I truly believe that
determines what
money,
you can do and can't do. No doubt.
Money will magically allow you. It won't necessarily make you happier, but it will allow you to pursue things that might make you happier. In other words, the Declaration of Independence didn't call for people to have the inalienable right to be happy, just to pursue happy. But if you don't have money, pursuing happy can be a whole lot more difficult if you're not, you're worried about keeping a roof over your head and food on the table.
Yeah, I think I used to have this discussion with my kids when they're high school grades, because they'd say, it's not really going to matter. And I'd say, it kind of does, because it keeps more options open. Having money allows more things you could do.
Yeah.
Should you wake up one day and
money's
say,
a big help, which is why we do this show.
Yeah.
We need money. All of us need it, whether you hate it or not. And bear in mind, the biblical quote is not money is the root of all evil. It is the love thereof that is. It's being obsessed with it, but you need to have it.
Yeah, I hate the obsession. It brings to mind a great quote from that wonderful comedian Steve Martin, who wrote once, I love money. I love everything about it. I bought some pretty good stuff with my money. Got me a $300 pair of socks. Got a fur sink, an electric dog polisher. And, of course, I bought some dumb stuff, too. So thank you, Steve, for
That's
that.
Good. That's good. Hey, we also try to help you with questions because we know you have them, and we appreciate the fact that you have them, and we think they deserve to be answered one way or another, and we have several ways of answering questions. We can do it on our Saturday show, which, by the way, airs on Saturdays. And you can call
Didn't
us.
See that coming, did you?
At 3 p.m. Eastern time on that Saturday show on Saturdays. Or you can go to talkingrealmoney.com and record your questions. I'll do those on Fridays. Or you can type them up, and then they go into Tom's paper pile.
I need more.
Actual paper.
I'm
are you running low on paper piles?
I am, yes. So let's get to it.
Type some more questions for Tom
Please.
At talkingrealmoney.com on the contact.
How are you doing
form.
on recorded ones?
I shall look.
Yeah. I mean, you can tell when summer starts.
You
it always slows down. Sitting around.
We've been doing this long enough
that
don't
worry about that.
There is definitely a summer doldrum.
There is.
Doldrum, not doldrum. Let's see. How are we doing?
In my case, it's the sun. In your case, it's the rain. So it turns around in the summer months.
All right. From the middle of May until now, we have 1, 2, 3, 4, 5, 6, 7, 8, 9. But
how many
4 of those are from Bitcoin Bob.
Oh, God. Is it still? Come on,
the dude is obsessed.
Bob, find another. Speaking of purpose, finding something, find it.
Bob, find another podcast.
Yeah, we're not airing you again. It's over.
It's seriously
one of those relationships. We're giving you the stiff arm. So
you don't. I get it, Bob. You don't like me, or I think his name online is Boomer Me. On the Apple reviews, because he does a new review every week that sounds just like him.
Yeah.
Bob, I get that you hate me. You hate my message. It's okay. We don't have to be buds, dude. Really.
It's starting to remind me in 9th grade again. I can't remember her name.
That's what it feels like.
It's like, sorry, it's not going to happen. It's not going to happen.
I'm not putting your things on, Bob. I don't know why you waste all your time. I don't even listen to them anymore.
All right.
I just delete them.
Let's do some real questions.
So
here.
While you're doing the question, I'm going to start deleting.
You just clicking through. Larry writes us from Denver, Colorado. Hello,
that's close
Tom
to Bob.
It is, yeah. Hope it's not him. My elderly mother lives on Social Security. She typically pays no federal taxes at all. She has an IRA plus a small Roth account she never touches, which I will likely inherit. She does not need her non-Social Security income to meet her expenses. Got that part? Okay, right?
Yeah, does not need non.
Yeah, for the purposes of my question, let's say her income is $31.4 thousand a year. Right?
Oh, just hypothetically, 31,400.
And her non-Social Security income, IRA, RMD plus pension adds up to 8. So now she's at about
39, almost 40, yeah.
So what he's saying is based on this, it seems like she's leaving on the table the balance of $7,000 of her standard deduction. By my calculation, she could do a $5,000 Roth conversion. That would raise her provisional income and therefore pulling a bit of her social income into her AGI. Even so, even there, $15,000 standard deduction would wipe out her income, leaving her no tax bill. So he's wondering about doing a conversion to use up all that space, that additional space with her income. That's an interesting question.
I'm trying to see what the benefit.
So let's see. So you would
because if she's going to a net zero with her standard deduction, so she's going to a net zero.
Correct.
And she's going to stay around a net zero because again, it's all of these are about what's the future going to bring.
Yep.
You know, it always comes down to what do you think the future is going to be? Well, let's assume it's exactly the same. Then what would be the point?
Yeah, I don't know. I mean, I guess, the only point I can see here is that Larry inherits more that's Roth instead of IRA.
Oh, yeah. I didn't even think of the inheritance standpoint.
That's what
I was just looking at it from a purely tax standpoint. You're right. That would be a benefit to heirs, not to mom, but to heirs.
Exactly. So, and then he was asking about the 5-year rule on converted money. I don't think there is a 5-year rule.
No, there is no 5-year rule on
That's only
money.
for contributions.
That's only for initial contributions.
Yeah, right. So I think you're okay there. So I guess so. You could run it up to whatever the number is and take the standard deduction and away you go.
I don't see it.
Now, I don't know what they did.
Any immediate difference.
Did the new tax bill that's still wandering through Congress, is that having impact on the standard deduction? That I do not know.
It's raising the standard deduction.
All right. Okay.
So all it is good for this.
Yeah.
Not, we can argue whether it's good or not, but it's good in this situation,
Yeah.
it makes her even in better shape.
Yeah. All right. One more. Nancy from Liberty Lake, Washington, which is adjacent to the beautiful Spokane, Washington.
Oh, it's not adjacent to that other lake you live on.
No,
Long
there's nothing
way.
adjacent to that lake. Canada. That's the only thing. Building my defenses, too, just to make sure that I keep the Canadians out. So.
You know how dangerous the Canadian military can be.
I've got a flag flying now and everything, so I'm careful. All right.
Did you see Alberta, by the way? Alberta, there's a big group in Alberta that is flying combo American Canadian flags. They want to leave Canada and become part of America.
Sakes. All right, we're not supposed to joke about that because we hurt somebody
joke about that.
Okay, fair enough. We've been drawing. This is from Nancy. We've been drawing on our portfolio for about 10 years. They're both 77 years old. We have 2 IRAs, a joint account, and separate property account. About a 2.2 million in American funds and the Franklin Income Fund, which produce dividends. We withdraw. They say they reinvest the capital gains. 100% is not being tapped for income. If a portfolio is in ETFs and index funds, what strategy is used to generate income and preserve the principal? In other words,
this is where we get very, very confused as consumers, because the Wall Street has done this to us. They're saying buy income-generating vehicles, and we're saying you get income from almost everything if you have a diverse portfolio. And by the way, the Franklin Income, if you have the A shares...
How much?
Well, if you have the A shares, you paid a 5.75% load.
And what's the expense rate?
0.7% per year.
That's ridiculous.
I know.
The American funds are going to be
they're about
50 to 60,
points,
something.
Yeah.
So I wouldn't own those funds, and so that would be one. And then but back to the income part.
You take it from the portfolio.
That's right. It's a total return strategy. You come up with what you want. The better way is to reinvest all those things and then rebalance at the end of the year and collect that money rather than turning on the dividends.
Right.
It's just been a better long term. It's sustained the portfolio longer.
Let's do this really simply.
Yeah.
Let's do this really simply. Let's say you got $1 million. Well, you got $2 million. Let's use $2 million.
Sure.
And you need $80,000 of income a year.
Sure.
And you're getting most of that from your high income fund, which is about right. The Franklin Income is paying 5.5%.
Wow, 5.5%. Okay.
But the reason for the yield, this is the other thing they bet they didn't tell you. The reason for the yield is that, let's see, about 30, 40, getting close to half of the portfolio. No, over half of the portfolio is junk bonds.
And that is not what we call safe fixed income. Again, fixed income should be for portfolio stability.
That's stock risky.
Yeah, it
income.
Is. Absolutely.
Stock risky
100%.
income. You have a bad broker. I'm just telling you.
Well, no, I think she's doing this on her own, she says.
Wait, she picked those funds? No, somebody picked them for her.
Yeah, you're right. At one point.
Okay, well, time to get rid of those.
But she's asking what would be
total
the other
return. So you have your $2 million portfolio. Yep. You take out, there's the 4% rule.
Yep.
People, every year when it's time to rebalance, you look and you go, okay, look at this. I got to move like $120,000 from stocks to bonds or bonds to stocks or whatever it is. Well, you take your $80,000 income out of that, and then you move the $40,000 when you're rebalancing. Or let's say you're rebalancing, but you don't have anything that needs to be rebalanced at that point. Then you sell proportionately from both parts of your portfolio enough to get to the income that you are trying to get for that year.
Assuming that, again, that there's been no movement of either. And if the stocks are down, for example, that's why you want the stable bond part, because you're drawing from there. By the way, just out of curiosity, what did the Franklin Income Fund do in 2008 or even the early part of 2020? Because this is the problem with a fund where you feel like it's, I hate to use the word stable, which is what we'd be looking at for fixed income. I don't believe that would be very stable in a time of difficulty.
In 2008, it went down by about 22%.
Yeah, I was going to say 20%. Yeah, and again,
And what was the other year you wanted? 2020?
Well, the spring of 2020. But again, the good news there was things rebounded quickly, right? I mean, it went sharply down.
But it got hit hard because of its junk qualities.
Yeah, and that's what we're trying to say. You said stock-like. I think that's a very good analogy because that's what it is. It's risky corporate debt that at times of uncertainty will be very difficult. So it's not a fund that we would use, plus the expenses, plus the commissions, et cetera. So Nancy, back to your overall question. Total return strategy has been more sustainable and has worked for a longer period of time. I'll put it that way.
That's another trick to doing that. This is a very cool trick, as a matter of fact, is because of bad years. Every once in a while, you just have a bad year. So keep your 1 year worth of income in some sort of cash equivalent that's paying you as much as cash equivalents can possibly pay you,
which today is still 4%.
And then you may just decide I'm gonna begin replenishing that as the money comes in and not take the big distributions if you don't have a big rebalance. So gives you a little flexibility. It's not market timing. It's just being flexible.
Yeah, I think that's excellent. Speaking of excellent, we want you to be educated about all this stuff. And we, Apello Wealth, have a ton of classes now that are available on all kinds of topics. You simply go to apellowealth.com and click on events. There's a whole bunch of stuff up there that's either already up on the web that you can watch or coming up. I think we've got one. Well, no, I think this is. I always get
Wait a minute.
confused.
Let me look. Events.
The federal ones are going to be too late, but you'll be able to watch the recording. So the recordings are all up there. There's all kinds of stuff. So
there's a bunch. We can skip these, but we've got one June 24th. That's on my birthday.
Oh, okay. Well, that's
smart moves, navigating life's big changes.
I think we just mentioned something about that in this. This workshop,
is this available to everybody?
It is. Anybody can go sign up.
The July 9th one. Oh, the registration's not open yet.
That is, I don't know because that's a client one with Apollo.
No, it says registration open soon on the public-facing site.
Okay, so Apollo will be there talking about
Apollo
the second quarter.
You guys,
and he
on
is
July 9th.
Always good.
He's amazing.
Yeah. So there
I love listening to Apollo.
So take advantage of that. Oh, the other one to take advantage of is getting some help. Now, we talk about this from time to time. I think people overlook the one thing we do absolutely 100% free is we'll do a complete review of your overall holdings. So you know how much risk you're taking. You know what kind of diversification you have and how much you're paying others. Then as part of that,
no high pressure sales pitch.
But as part of that, I just got a phone with somebody this morning. We'll talk to you a little bit about your situation. Say, here's something to think about, et cetera, et cetera. If you wanted help beyond that, we're going to charge you, but you get all that first part absolutely free. And we love doing it. So
yeah, Tom does it all the time.
I enjoy it. It's my purpose, helping others.
Yeah, mine is editing this podcast, which I have to do now.
Yours is staying in that small room, hoping that the weather doesn't bring the entire thing down. So,
well, it's Florida. Yeah, we do have to think about that.
That's true.
You have to think about earthquakes bringing your entire thing down. Yeah. So,
you think it'd be a tsunami on my lake? If we had an earthquake?
No, it'd just be like the bath. It'd be like getting out of the bathtub,
splash.
Little splash over the side.
All right, fair enough.
Might fry the new motor on the boat when you get it fixed.
No, I don't think it's going to get fixed because the guy that was going to fix it has 39 out of 43
this is hysterical.
reviews.
Before we
we
go, Tom's going, I don't know where I'm going to get somebody to fix the boat. It's got an electric motor because it can't have gas. So he looks online and he calls a guy, and the guy goes, yeah, sure, I can fix your boat. No problem. So Tom, after the fact, goes to goes to Google and looks him up. You gotta check people out. He did his Google review.
God's sakes.
39 out of how many?
43 were 1 star. One star.
Gosh.
I mean, that's hard to do, probably. I mean, at some point,
no, that's impossible. I've never seen that many bad reviews.
No, that's kind of shocking. So, sorry.
Wow.
I'm not going to be hiring him. I guess that's the bottom line.
All right, we got to go. On that note, we're going. Okay. We're out of here. We're ending this thing. Thank you all for being a part of it. We really, truly do appreciate you. And
if you could fix an electric motor, call me.
If you could fix an electric motor on a boat, and you have,
and you don't mind going in the middle of nowhere to do it.
You have fewer than 25% 1-star reviews.
Give me a ring.
Give Tom a call. And thank you all for being there. And we will be doing this. What is it called that we're going to be doing later with you on another podcast?
Every darn day.
Talking real money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.